Hi, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. I'd like to remind you of a couple of things. First, if you'd like to get these videos every week, simply subscribe to our YouTube channel and like this video so I know you like it. Hit that bell symbol and you will get a notification the second that we post it. You can also follow us on Twitter at SVA Insights and my own personal Twitter handle, BH Economist. Second, I really do appreciate your questions and comments. So if you have any, just send me a tweet or a comment on the video below. Even a negative comment is positive because I love the banter back and forth. Anyway, this week I got a new subscriber who posted something rather nice. Uana Irani stated, "You are my favorite analyst on BNN. I'm so happy you decided to have your own channel. Finally, nobody will interrupt you when you are trying to explain your reasoning for your investments, and I am looking forward to your weekly videos." Listen, Uana, I know that sometimes you find it annoying if I'm cut off on BNN when I'm explaining a tricky concept and need more time. But television is a powerful medium for reaching many people at one time, and most of you would probably not be watching me if not for BNN. Besides, frankly, after 20 years, I have to admit that I love the medium and I really like the people on BNN Bloomberg. They're wonderful, hardworking people. And if they want to put their own oar in from time to time, listen, it goes with the territory. But this is why we started FANG Friday. Just a reminder that yesterday I was on BNN Market Call during the day with Andy Bell. We had a great time, by the way, and in case you missed it or would like to watch it again, you can do so by clicking on the link in the description below. As always, I will inform you when I'm on BNN next, so stay tuned. Turning to this week's FANG Friday, this week I will start with an intriguing highlight from my time on BNN with Andy. So let me start off by looking at Chartwell Retirement Residence. This is a very interesting chart because remember that the slope of all of these lines tells you the slope of the book value of each of the companies that we follow. And that dark green line, by the way, is the actual book value itself. And you'll see with Chartwell, the trend of the balance sheet has been down, down, down for, well, golly, almost since 2006, roughly. And the reason for it is very easy to find. You just have to go and look at the earnings, and here in the latest year you see that they earned 5 cents, and they paid out a dividend of 60 cents. So what we know here is that the company is actually paying out its equity, and it's been doing that for years and years and years. Well, how does the company survive? Well, I have to tell you, it's really easy. What they do is from time to time, this company will issue new equity, and they will issue equity at a very high price-to-book ratio so that the average price-to-book per share actually goes up. And in this case here, back in 2015, it can sometimes jump quite a bit. Well, what that means, therefore, is that this company, therefore, has an infusion of equity, which means that they can keep on paying out a high dividend even if they don't earn it. Now, you know what that sounds like, so I'm not going to say it out loud, but we call this kind of company a Bay Street miner. That is, they don't necessarily earn the money that they pay out. They raise it in the stock market, and then they pay their dividend out of capital. A very intriguing kind of company, and there are quite a number of them actually in Canada and the States. You will need, of course, our service to see them all, but it's very interesting to find them. Anyway, let's turn to the FANGs themselves, and let's start off with Amazon. Well, remember that Mike had actually gone in and decided to buy some, and it turns out that that's turned out to be a good move from Mike's point of view, because the stock, with some really superb earnings, has jumped up to its breakpoint, its HB3, which is 15 times its book value, and actually lately has actually broken out above there. So whether this company is going to finish the job and move to the next breakpoint, I don't know, but at least it is now promising. And given all of the stimulus that the Fed, stock buybacks, and government deficits that have been running, there's a lot of money out there, and it's going somewhere. In this case, it looks like they may be getting into Amazon, which may, I only say may, drive the company to the next breakpoint. Let's look at Facebook, and this is a kind of a more of a different kind of a story. The Facebook, you can see, is kind of struggling around its MSG price. That's 5.5 times its book value. It was doing well, and then it slipped down again and actually broke down, we thought, and so that's a bit of a caution signal, but the stock has recovered back over the line again. This is not this, unlike Amazon, which had a beautiful strong move. Facebook looks as if it's struggling than if it's really trying to go to the races. Compare that with Alphabet, which also broke out, and as usually happens when you get a technical breakout, there's a breakout and then there's a pullback to the technical breakpoint. In this case, the LSG price, which is 4.5 times book value. However, in the pullback, the stock has stayed nicely above the LSG price. So that is quite promising. As I said before, the history of this company going back for the past 10 years suggests that the stock may not be able to get all the way to the MSG price, which is 5.5 times book value, as in the past it has stalled about halfway there. But for the time being, at any rate, the company remains in an uptrend. Looking at NVIDIA, well, you can see the problem here. The stock has run right up against its HB2. That's 12 times book value. And so far, the stock has been unable to break out any further. Whether they're going to be able to do that, I don't know. I do note that the longer that it stays up against the HB2, there is some probability that it can break out. But given the fair market value, which of course is 52% lower than the current stock price, we'll have to say there's going to have to be something extra special to break this company out. Looking at Netflix, well, Netflix is midway between its HB3 and its HB4, which is 16 and 20 times its book value. At this juncture, I really don't have much to say as to the direction, because when a stock is between two breakpoints, the price movements can essentially be random in nature, particularly when the fair market value, which you can see here, is 74.39% lower than the current price. there's quite a struggle to drive this stock further. And of course, on top of all that, there is a tremendous amount of new streaming services coming into competition. I'm surprised, actually, that it's got this far. Apple, well, look at what's happened to Apple. Breakout here, the stock has gone virtually straight up with very, very, very little volatility in between until, and let's look at it a bit more closely. Okay, the volatility has picked up quite a bit, and I'm not terribly surprised at that because it's right up, or almost right up, against its HB2, and that is a very, very extended valuation. In fact, over the past 30 years that we've followed the company, the HB2, which is 12 times book value, that would be the highest valuation that this company has ever managed to achieve. Finally, we have Microsoft, and Microsoft broke out over its HB1. As you know, I spent some time telling you why I thought that the stock may not be able to break out over that break point. However, it has managed to do it. It broke out and it pulled back. See, just like a good stock should, break out, pull back. And then it's been slowly oozing forward, and now it's been picking up because the earnings have been quite strong. So even though the company had got to kind of at the highest level that it had been at for a long time, say very like Apple at its HB2 level, that's where Microsoft got to, and has been able to pick up and go further, and with good earnings, then very strong earnings, may well be able to get to the HB2, which will be 12 times book value, and that's $198. Anyway, that was a look at this week's FANGs. If you want to learn more about our proprietary charting system, you can visit us at strategicanalysis.ca. Or give me a call at 416-489-3603, extension 133. Or better yet, if you live in the Toronto area, come on down to our offices at 130 Bloor Street, and let's have a chat about how our tools might help you become a more confident investor. Anyway, this has been Ross Healy, the chairman of Strategic Analysis Corporation and senior portfolio manager at McNichol & Associates. As always, I want to remind you that nothing, including investing, is difficult if you have the right tools, as I hope that I've shown you. I'll see you next week.